We are now going to be looking at section 57B. This is the disposal of a right to receive an asset which would have been acquired for services rendered. Now, you'll see this situation I try to show here in 3 steps to first explain when this section applies. So this is when an employee, step number 1, agrees to render a service to an employer. So the employee says, I will do accounting services for you, for example. And let's say, I'm just thumbsucking an amount here. They will give services and the value of that will be 400,000 rands. This employer again then agrees to pay this employee, step 2, by giving them an asset. So instead of paying them 400,000 in cash, they say, we'll give you a flat to stay in. So they get an asset. Then, before this employee becomes entitled to the asset, so for example, this employee said, I will do this service for you and it will take me 2 months. They only become entitled to the payment of it after the 2 months, before they become entitled to it. This employee disposes of this asset to another person. Okay. Now what happened in the past is this was a way in which people sometimes escaped donations tax, because this employee would say, I never received the asset. The asset went directly to this other person, and then there was no disposal of it. Now again, this might seem like a strange situation to you, but this could be, for example, this employee gets this asset, I said it's a flat, let's say, all right, to give to their mother, what they want to do. So that's a way of transferring assets. Now, what happens if you have this situation, these 3 steps here? It's the following. Step number 1, this employee that we have here will include the amount in gross income for services rendered. So they will go services rendered, like in my example here, 400,000. The employee, still this person, is treated as if they then received this asset for an amount equal to the gross value. In other words, what it means is they treated as if they purchased this asset for 400,000 rands. Now, you then treat that the same way as you would treat any asset that was purchased. So that asset, let me show you what I mean. If it was trading stock, for example, you would get a trading stock deduction. If it wasn't trading stock, if it's a capital asset, that would become the base cost of the asset, would be 400,000. So if they had to dispose of it. Nothing's new there. I just want you to understand you treat it as if you purchased it. Right? Then the employee is treated as if they donated that asset to this other person. So you need to consider donations tax, CGT, and gross income. Let's talk about CGT and gross income first. First of all, it means that they are treated as if they sold this asset for 400,000. So if it was a capital asset, that would mean you would say proceeds 400,000 and base cost 400,000. So there would be a null effect. If the asset was trading stock, right, so I'm just going to call it trading stock here, you would have had a deduction of 400,000 when you purchased it here in step 2, and then when you sell it, it will be treated as it's sold for 400,000. So again, there's a null, sorry, just for there, there's a null effect. Right, just be aware of that. You treat it as if you sold it. But what have we not considered here? Okay, so actually, let's just keep this here, gross income. We haven't considered donations tax. Now remember, donations tax is a separate section. So you're treated as if you made a donation of 400,000 rands. You can still get all your exemptions and exclusions from that. So if the annual exclusion, for example, you can still get. But if there's nothing, no exemptions left, or exclusions left, 20% of that will be a donations tax that will need to be paid. This other person is then treated as if they purchased the asset for 400,000, the value of it. So again, if it's trading stock, they get a deduction. If it's capital asset, it becomes base cost. But they treat it as if they purchased it. Right, so just be aware of this section, guys. It's a very specific situation, but as you can see, very simple to apply.